Welcome back, John.
It's great to be back, Dale.
Yeah, nice to have you. I've been tweeting out there that, when you were leaving in our last interview, I think it was March, and the one thing you said with conviction is just buy beans. Great call, John.
It's nice when they work, sir. It's nice when they work.
Yeah.
I feel like I had a Bitcoin call in there too. I may be wrong, but I feel like
yeah,
it was a
and you
Bitcoin
also
call.
had, don't fade equity strength. I'm going to share my screen. Don't fade that equity still had upside. There was no reason to worry about it. And before we get to the markets, I had a conversation with Jack last week, and he talked a little bit about some of the unknown wizards. And, I brought up your name that I'd been talking to you. And Jack said that your time in the Marine Corps was transformational for you, that's where you lived, really learned discipline that you didn't have in high school. What kind of wild guy were you in high school, John?
I provided liquidity for those wishing to prognosticate on the outcome of sporting events.
Oh, that's right.
Yeah.
Hey,
We may have spoke about that. I don't know,
Yeah.
but that was my ethos, was
Okay.
taking risk on the 49ers and Joe Montana. And it was a while ago.
Hey, John, this is Blake, and I wanted to interject really quick. I myself am a former Marine, and Semper Fi, Devil Dog. I was in from 1990 to 1994.
Nice.
I was a Marine infantryman, so I was an 0311. I'm not sure which.
Woohoo!
Yeah,
I was aviation,
ground pounder.
Marine security. Right.
Yeah. So, but I was gonna say, Dale was talking about discipline as a trader, and I'll tell you, prior to my military experience, I was probably the most undisciplined young man you'd ever met in your life. But it really shaped I think it shaped me as an adult, but also shaped me as a trader as well. So if that's what it did to you, it's interesting how that part of your life could really impact you years and years and years in the future, isn't it?
It is and it isn't, right? Like superficially, sure, it is. It's amazing, but then for those of us who've been through it, like Blake and I, you understand the intensity of recruit training, which those first 3 months where they effectively break you down. You know what I mean? And attempt to, and again, our growth is a lifelong process. It's not necessarily compartmentalized to a 3-month recruit training or to, in the case of you, you went to SOI or School of Infantry as an 0311, did you go to Pendleton, obviously for SOI? Yeah. And so for those of us that go on our Marine Corps journey, and then I would say to complement what the Marine Corps did in terms of discipline was also constantly pushing you, or to those of us Marines who were amenable to it, outside our comfort zone. Going to boot camp was not a comfortable experience. And you knew that going in, which was, dare I say, part of the seduction. When I was in high school, and maybe you were the same way, Blake, but I actually sought out the Marine Corps recruiter. Okay. And I talked to a lot of Marines which is bizarre. People say, wait, you sought out, there's this impression that you were duped or whatever. It's no, it's because of this persona, because of this cachet of the Marine Corps growing up. And I was a very, very undisciplined, and so knew that I needed better structure, knew those things, and it was this sort of almost from Providence, dare I say? That,
go ahead.
No.
You could say that when I'm interviewing you.
Okay, fair enough. Okay, and so almost from Providence, all right. There was this calling and this internal intuitive piece that when I saw the Navy recruiter, and I was 18 years old, I was a senior in high school, and Navy recruiter was talking to my buddies. The Navy recruiter was well, what about you? Have you thought about the military? And literally at that moment, and I don't know if I talked about this in the interview with Jack Schwager, but literally that moment I said, yeah, I'm gonna go join the Marine Corps. To the Navy recruiter, all right. And they just it just clicked, it clicked. And I called the Marine Corps recruiter, and he said, yeah, come on up. And I grew up in the East Bay area, and I had to get a bus, I had to make arrangements, and then the recruiter actually came pick me up because obviously I didn't have a driver's license in high school. I was something I did. I was running a gambling operation, and that wasn't a focus, and And so, yeah, and then doing some stuff. And then November of 93, that was like June of May of 93, about a month before I graduated from high school. But as tough as I knew I was going to be, like, I just had this peace about me joining the Marine Corps. As hard as it's going to be, as tough as it's going to be, like, I just had a peace about me, like that this was my calling. There's a bigger calling from doing this.
Wow. Interesting. Wow.
That is interesting. And I'll tell you, John, I'm not going to lie. I joined the Marine Corps because I was going to wear some dress blues, and that pulls way more chicks than any other uniform out there, hands down. So
I was
anyway,
not unaware of that ancillary benefit, to be real. I'm not judging for that. Okay. Dress blues are legit. Dress blues are way legit. Okay.
Okay.
Yeah.
Hey, I'm going to let you guys continue on with your interview, but John, good to have you back.
Great to be back, Blake. Appreciate it, buddy.
Bye-bye.
So, John, okay. So, you go into the Marine Corps and now you're out. And did you know when you were leaving the Corps that trading was going to be your next endeavor? How did it happen? You knew while you were in the service?
I knew, yeah. I mean, and I'd done quite a bit of investing stuff even in high school, and I had read like the Wall Street Journal stuff every day, and was then Investors Daily. They changed it to Investors Business Daily. And so, like, I had always had a love of finance and numbers and money and risk, especially risk. Okay. And that bordered on like risking too much at times and arguably having like a quasi gambling challenge or problem or whatever you want to phrase it as, of like, wait a second, you're going on tilt here. That's sort of a poker term when like you sort of let the emotionality of the moment dictate the risk you take and you start chasing, So I think anyone who's been trading has been overcome from that like moment of like where you lose sort of sense of your amygdala basically hijacks your brain sort of from a neurological perspective. And when the amygdala hijacks your brain, you're in like fight, flight, or freeze. And that is not you using your choroid region or the cerebral cortex of your brain to make objective, analytical, intuitive decisions. Okay. And so the Marine Corps definitely helped me. I would say I was going to sort of, before I got off on the sentimental nostalgia Marine Corps trip with Blake there, I was going to sort of like talk about the discipline that comes from that people unappreciate, that you can go to the best business schools or the best law schools or the best, be the best quant. Okay. But if you don't have an understanding of your own emotions and how competitive one can be and how that competitiveness can manifest itself to become a risk event in your personal portfolio, it just doesn't matter, because eventually there's a very good chance that's going to undo you in your trading journey. Okay. In a dramatic way. And that, I think, is when we talk about discipline, it's like, if you can have an awareness and be disciplined enough. So when that time comes, because it's a mathematical certainty, if you do this long enough, you're going to get beat up by the market to where you're going to want to chase losses. Okay. You just like, oh, if I can, I mean, I've been in this for 20 plus years and I still have days where like, I can feel that impulse coming. I can feel the amygdala begin to hijack my brain. And I'd be like, oh, I want to get this loss back that I had from today. Let me just buy X amount of treasuries and I'll get it back. And I mean, I don't do that, obviously, but that feeling is there, and that feeling never goes away, no matter how long we're in this business. Okay. And so you just have to like appreciate it. Like you have like one of those like odd members of your family that's just kind of like, and like, it's just who he is, right? It is who she is. You know what I'm saying? Just accept it.
Yeah. Your awareness kicks in that it's about to happen. Before you didn't have that awareness, kind of like being the watcher and looking at yourself doing it.
Yeah, absolutely. Absolutely. So,
all right.
Enough about my my Marine Corps stints.
All right.
And
well,
else.
I do want to get to the markets, but John, I think a lot of traders have unrealistic expectations that they could, read a book over the weekend, open an online account, and just do it. And Jack says, this is the only thing that you have a 50% chance of being right, long or short. And so, people think they could do it, but it's really as realistic as reading a book about brain surgery and thinking you could perform it on Monday. So, a lot of people think it's something that they could master. Most of the people I talk to, it takes years. So out of the gate, what would you say, once this became a full-time endeavor for you trading markets, how long did it take you to where you really had epiphanies and breakthroughs and, maybe you weren't a wizard status, but you were proficient?
I'm still not sure I'm a wizard status, honestly.
I know. I know. You're an interesting guy to write about that, has had success in the market. How did Jack find you? Through Fund Seeder or?
Yeah, through this crazy thing called performance on Fund Seeder.
Yeah, okay.
It just sort of worked out that way that the performance of my account, those uploading data statements did, in his opinion, did well enough to warrant the attention and the interview. So there you go.
So how many years before you started having that kind of performance? Wasn't right out of the shoe, was it?
No. Gosh, no, heavens, no. It came with a lot of pain and came with a lot of tuition. That's for sure. The early years, as I talk about in the interview with Jack, were up and down, and I had to use my. I was a proficient trader. Okay, I was a trader that you could give me, and I'm not saying I ran this in AUM terms, but let's say you could have given me $100 million like 3 or 4 years in, and I would have like made you 5 to 7% a year. Okay, like I because of the Marine Corps, like truly blowing up was not really a risk out there. Those emotions I talked about definitely took over and they led to outsized losses, but they never led to any blowups. Okay. And I was at least aware enough that, hey, dude, this is not, you got to just stop this now and walk away. You know what I mean? Before the losses got so incredible that, that you couldn't recover from them. Right. But to answer your question directly, like when I became sort of the John Netto of today, like I would say in 2021, I'm probably trading as best as I ever have. And I was trading really well in 2020, and I traded really well in 2016. My best year on a personal level from a P&L perspective was 2013, from an absolute like pure numbers perspective. But I'm a much better trader today than I was in 2013. In 2013, I happened to catch some markets that that were in a strategy that I used the right amount of leverage on that played out really well. So when you talk about and I've had some really great years since then, but not quite as good as P&L in terms of 2013, right? But again, solid year this year, good year last year. 19 was you know what I mean? 18 was a really good year. 17 was really tough. 17 was my toughest year in the last decade.
Okay, what was your self-talk? I say that, a lot of people say, hey, I'll sell you the secret of how you trade. And, it's my view that the secret is there is none. It's hard work and living through adversity. If that scares you, do something else. So what was your self-talk during the times you were going through drawdown so that, you were able to manage it and not have it turn into a disaster?
No, great question. My self-talk was that up to 2017. So let's take 2017, which was a rough year, meaning that I didn't make any money. Okay, in 2017, or I made a very minuscule amount of money that didn't even cover my expenses. Okay, so that's like a full year of work that after expenses you lost money. Okay, I didn't lose money trading P&L, but some of the self-talk for that time was, dude, look at your last 7 years of P&L.
Okay, there you go.
So it was like, remember we did in 2013 and 2015 and 2016? Well, if you average what we did in 2016, 2017, you're still crushing it. You know what I mean? And so when you have the numbers in front of you, which then puts the emphasis on data collection, right? Because if you don't have the data in front of you, you can't identify and compartmentalize what you're doing well at and what you're doing, poorly at. And then you can break those out. Like that's what helps you. That's the self-talk is, okay, let's look at the data. Because if you look at the data, you can analyze the data. And I don't mean you didn't have every single nuance, every single thing. If you can do that, that's great as well. But if you can look at your track record, look at your P&L, identify a strategy. Oh, look at this. If I took this trade, if you're developing a strategy, and you can look at it and say, well, wait, the strategy worked, but I didn't execute well enough based on an objective set of criteria. Well, then your self-talk is, oh, look at this data. I now know I have a path to fix this. And if people have a path to fix something, then they have hope, Dale. And hope is a freaking powerful elixir.
It is. Yeah. Not on trades, in your life.
In your life.
I mean, you don't hope that, this is what I've heard people say this. I've heard it in my head. I hope this one works.
Well, I don't mean it that way.
If you're saying that, it's time to take a break. But great to get some background on you, John. I Bitcoin chart up here, and it was a pretty classic topping pattern with the 3 drives to a top, and the market's divided. I thought we could go to 36. Here we are. We're trying to stabilize. Your view on on crypto. And if
But my view,
Bitcoin's
I'm more bullish Ethereum. Probably like a lot of people, I'm more bullish Ethereum than Bitcoin.
okay,
And the whole DeFi space. I've been long Ethereum. I again can't guarantee this will happen the next time, but I managed to largely sidestep this wipeout from 2 weeks ago, and just be very, it's just been a great market to trade. There's just no other way to say it. You know what I mean? And it's almost to the point that like every other market, not completely put aside, but like the Ethereum and Bitcoin markets are just moving so much. They have such a flow to them right now. You know what I mean?
yeah,
And I'm fundamentally bullish them as well. So like my basically the strategy I'm using for crypto now is like I'm just waiting for these wipeout points that there's, at least in my opinion, there's very clearly buy programs of institutions that are going to own Ethereum, that are going to own Bitcoin. I like Ethereum more than Bitcoin right now. And I think that, as crazy as it sounds, I mean, I think when I was on here in March, I talked about Bitcoin going to 60-something thousand, I believe. It might not have been that, yeah. So we were 65,000, you know what I mean? What, 3 weeks ago, 4 weeks ago in Bitcoin. Okay. So like that ring the register on that trade, you know what I mean? And then really right now, I think we're going to see that number again in Bitcoin probably like by September-ish. And I think that the bad boy is Ethereum. Like I think Ethereum now, what is it, 27, 22 right now.
703, yeah.
It's quite fair enough, yeah. So I think that bad boy is going back to like, I think it has like a 6,000 handle on it by year end. Even a 7,000 handle on it by year end on Ethereum. Wow. Yeah, wow. No, this is no joke. I think that this is a space that is offering maybe the most transformational generational wealth in my entire 20-year trading career. And I think that if you struggle trading, and again, you know, read all the risk disclosures and everything else, but on a non-leveraged basis, okay, if you can get in and own some Ethereum, and if you struggle trading, you park it and come back and check in with me in December, okay? And you buy your Ethereum at 2,700, okay? And it may go back down to 2,000 again, all right? But I think it's going to have a 7,000 handle on it by the end of the year. It's going to touch 7,000. And you put your limit order in, you put your limit sell in. Yeah, go ahead.
Yeah. Okay, so there's a crypto space. Curious, you know, what you think about some of the altcoins, you know, especially some of the hype like on Doggy
Doge.
Doggy.
You know, here's the great part about that is that to me, they're incidental to the move in Ethereum. I think in Bitcoin, but like you can have an opinion, but it's not totally necessary for the call that I just made on Ethereum to like tell me where Dogecoin is going. You know what I mean?
Yeah.
Or to tell me where Cortana is going, or Link. You know, or some of these other guys, which I think are, again, not a bad thing to have your portfolio. But I just mapped out a process that's going to put Ethereum like basically the price point that like a lot of other stuff around that to me is just largely noise. You know, it's not inconsequential, but it's just like, what did I just say? You know what I mean? Like, okay, that's your focus, right? Like,
yeah, yeah. And why get sidetracked in these altcoins, right?
You know, I don't know. I mean, listen, there's a lot of altcoins that if Ethereum pulls off the move I'm talking about, are going to pull, you know, 2 or 3 times that, or 10 times that. You know what I mean?
Okay.
The question is, are you in them, and are you, you know, depending where you're at, like, you know, if you're someone that manages money for people, I would say at this point, you know, if you have a 2 or 3 or 4% allocation of crypto, that's now defensible. And I think that's the big sea change that wasn't there 3 or 4 years ago, is the defensibility of owning some modicum even of crypto in your portfolio that just wasn't there before. And I think you're seeing, you know, people migrate, and it's good to see gold kind of back above 1900 again, but kind of, you know, crypto sort of doing what gold was supposed to do, you know, year on year, right? Like, there's this epic amount of government printing, there's this epic amount of, you know, whatever in wares, and, you know, in the gold space, I hate to say it, but like the miners are working against gold, okay? Like they're trying to find more of it, etc. Whereas like in Bitcoin, and, you know, there's conceptually some really brilliant things that the crypto space has done in terms of like, you know, just the halving dynamic and some other stuff, and it's really fascinating. And I kind of like Bitcoin's just it's been a better inflation hedge. And we look at crude right now. Look at some other commodities out there. Inflation's here, Dale.
Yeah. You know, maybe you could explain it to me. A friend of mine who's been in markets for a long time was writing about an inverse relationship between Bitcoin and gold, that he was noticing on days when gold was up, Bitcoin was down. Is there anything to that? And if there is, what could be behind it?
Sure. So let's take a couple of shots at that for a moment. Okay.
Okay.
I think
Yeah.
what gave gold. There's two different things that happen, and one of the big like law school sort of like phrases or principal arguments when you take the LSAT and then go on to law school is like correlation. And this is not just in law school, but correlation is not equal causation. Okay, correlation does not equal causation. All right. So let's examine what happened with gold going back to November and really why it struggled up until really recently to where it's kind of regained its footing to be sort of basically unch on the year. Okay. And I would argue that what has hurt gold has been when treasury yields began to rise.
Right.
All right.
Okay.
When we saw the vaccination news come out in early November, what you were seeing is gold and treasuries began to struggle. Obviously, yields go up, treasuries go down. Yields go up, also gold go down. Okay.
Right.
As this whole economy repump play come back on board again. And one of the benefactors of gold was that it in a world of negative interest rates. Okay, right. The fact that you were getting a positive or quasi positive carry out of gold left a good impression there. Now, concurrent to that, okay, not necessarily caused by that, was the November sort of Bitcoin breakout. All right, and what you had was sort of this collective discovery. All these, when Bitcoin's now 13, 14, 15,000. And you're getting all these announcements from PayPal, from Square, from these institutional allocations that all hit in November, which helped perpetuate this year-end ramp up in crypto that was not necessarily having to do with rising yields or anything. There was this more existential institutional acknowledgement of the viability of crypto, and in particular of Bitcoin, and the allocations that were coming on from more and more institutions day after day in the month of November, which was sort of this big kind of breakout month for Bitcoin, which coincided with sort of the discovery of the announcement by Pfizer of the vaccine, and again a tick up in rising yields, and we saw yields move pretty demonstrably in up, and gold succumbed to that. So those two things, I think, if you want to talk about the inverse correlation between Bitcoin and gold, were at play there, and I would attribute more of it to that than more coincidence than actual long-term inverse correlation
or planning that that it would be an instrument like that.
Right. And I don't rule out that we have maybe this leads to our next subject in terms of the Fed, in terms of inflation, but the Fed's behind the curve right now. Okay. And I mean, I've lost a lot of respect for them. Not that I had much to begin with. Okay. But the idea that like they, are talking about like this inflation being transitory and that, we're not even thinking about raising rates or whatever. And it's like, listen, people, you came out in March of 2020 with a 100 basis point cut, due to emergency actions. Okay. We now have like epic fiscal stimulus. We now have incredible constraints in the supply chain. And I appreciate that for 10 years, we were in a disinflation or quasi deflationary global environment. Okay. I'll grant you that. Okay. But right now, like we saw average hourly earnings tick up. Let me tell you what kind of inflation is not transitory, Dale. The kind of inflation not transitory is freaking wage inflation. Because you ain't raising someone's wages and then going to cut them a month later, mofo. Yeah. All right. You're not doing that to me. You're not raising my wages and then cutting them a month later like you can to the price of oil, okay, or groceries. All right. Those can fluctuate, but my wages, they're not fluctuating. And so we're starting to see the non-farm,
especially with the labor shortage, right? The so-called labor shortage. They're going to have to,
no, that's not happening. Okay. And so you're going to have to raise wages. Okay. And when you raise wages, they're staying. They're not going back down. Okay. And there's 24 states that just cut the unemployment benefits. Surprise, surprise. You mean if I make the same doing nothing and I make the same work and I'm not going to go work? No way. Really? So, okay. So the bottom line is that this wage inflation is here. And that's the one piece of the puzzle that the Fed is like, kind of like the stun has been blitzkrieg by this kind of whole situation. And I think that there's a reckoning.
Well, they can't print grain either.
No, they can't print soybeans or corn. They could
crack economically sensitive markets with higher rates like lumber and maybe copper. And so that's really a big statement. Yes,
Dale,
Steve, go ahead.
May I interject?
Sure, go ahead.
Okay, so you think that inflation is moving higher, correct?
Yes.
Do you think that rates are going to be moving in tandem with inflation, hand in hand?
No, not hand in hand, but I think it'll happen in
Okay, so
non-linear.
why do you think
Yeah.
this is an environment that's negative for gold? Because gold never cared about nominal rates. Never ever did in history and never will.
Tell the people.
Since we agree on the thesis that inflation is going higher, check. Nominal
So,
yields are not going to move as fast as inflation does. Then why is this a negative environment for gold?
so two things to respond to that. Okay, the first is that we were identifying. The question was about the inverse correlation between Bitcoin and gold. Okay,
Yeah.
and so
He
Dale
didn't
asked
say
me
he
to,
was negative gold.
so Dale asked me to
Okay.
walk through what might explain the perception over the inverse correlation between Bitcoin and gold, and I walked through that going back to November.
Yeah.
That market positioning around sort of this zero yield, the benefit of gold in a portfolio in a zero or negative yield environment came under significant P&L duress from people that held gold, as the number of people who had held gold were sort of were forced to liquidate during that sell down. Okay, so that's my
So
first.
there is some kind of opportunity cost for gold, but there will never be an opportunity cost for Bitcoin or any other cryptocurrency because they will keep climbing internally.
I don't deal in categoricals, but about nevers and always. I stay away from those two terms, sir. But I will say that gold has been clearly challenged, and the performance of it, over the last, I would say, since it peaked out in August, has left a lot of frustrated traders. I mean, I've been bullish gold. I've been frustrated by and I've migrated or transitioned that bullishness over to the crypto space. And the price action has been rewarding, but that's easy to say in hindsight. But now let's talk about going forward. Okay.
Mm-hmm.
So going forward, in terms of my price target on gold, I think that gold can be, I think it will be a beneficiary of this sort of aha moment, to your point about nominal yields in gold. And I think that if this aha moment happens this summer, gold could be at 2,100, 2,150. But I think Ethereum is like going to outpace it, and even Bitcoin will outpace it. But it doesn't mean you shouldn't own both of them or have exposure to both of them. I was just
no disagreement there. A portfolio has space for many assets. There's no question about it.
Sure.
John, you know what? You're not only able to trade. You're able to communicate market ideas in a very clear and concise way. So why don't we wrap it with a legacy market? You were talking about, I don't know, maybe you were talking about this summer, you had a target in S&Ps. Anything changing there with NASDAQ lagging? Any yellow lights that you see yet? Or are you in the camp that we could still have a melt up? I know a lot of guys looking for a melt up, maybe even a 46, 4,700.
Yeah, it's awfully hard for me not to see the S&P 500 in a year from now, not with like a 5 handle in front of it, frankly. Okay. In 12 months going forward. All right.
Okay.
We are, I mean, what good that does someone right now, I don't know. You know what I mean? Could we sell down? I mean, I'll say this. Let me say this though, but I do think that one thing that has shifted, okay, is this idea that inflation and these economic points are not moving the markets. Okay. So I would say this, like, that for the first time since pre-COVID, like, pay attention to these CPI numbers. Okay. Pay attention to the employment cost index, which comes out quarterly. All right. At the end of, so in this, the next ECI is going to come out, July 31st, July 30th, comes out, concurrent to GDP. All right. And so watch average hourly earnings now on this number, because I'll just say this and walking away, is that what was problematic on this last payroll number when we missed was that we had, we were 500 or 600 or 700,000 jobs short of the survey, but it was the average hourly earnings that had risen. And this is sort of a new kind of economic frontier that the Fed's just not aware of, is that people are just not taking jobs. I mean, there's now 8 million open jobs, and the sentiment behind employers is that they're not going to have to pay. They're going to have to pay more. Okay. So I think that net, this ultimately will be bullish to gold and go from there. But those are the things I would watch, is that this changing narrative. If you get the narrative right, it's going to make trading a lot easier. Okay. Get the narrative right. And the narrative is is inflation more than transitory? And if it comes via wage inflation, it is. There you go.
Great interview, John.
Great stuff, Dale. Thank you, guys. Thanks for your
Thank
whole
you
team
so
there. I
much,
love this
my
stuff.
trading warrior brother. Thank you.
All right. God
All right,
bless you.
everyone.
Peace, guys.
John Netto at John Netto. That's a wrap, everyone. Thank you for hanging out, and good hunting the rest of this session. You could join the gang in 14 minutes for Morning Edge. Remember, don't just count your pips or your cryptos or your shares or your gold coins or Steve, your silver bars. Count your blessings, and that's really all I have to say. Everyone have a great day. See you tomorrow. Adios.